There's a little bit of a dump coming in there. We did end up front running that resistance level at $90,000 by a little bit. And that's basically what I said yesterday, right? I basically said that we're either going to front run this bitch or we're going to overshoot it by a little bit. And it looks like the market was kind of done and already needed to tumble lower. If we take a look at the S&P 500, my analysis was wrong. We did not find support at this level, which is not a good sign. That is not a good sign. But support levels on the S&P 500, we don't have to be that specific about them. We can overshoot them by a little bit and then still kind of recover. Is that going to happen in this case? I don't really know. It's obviously going to be more of a tariff-related issue, again, as usual. Very, very political here. But before we start talking about that, let's bring it back to Bitcoin here and talk about where this thing could be going, because the trading opportunities here could start to open up now that we've gotten a little bit of volatility for the first time, honestly, in about a week, which is absolutely fantastic. Now, we did end up plummeting below this support level as well. It's the same support level that the S&P 500 lost. Bitcoin lost it too. So that analysis I gave you on Bitcoin was also wrong. Bit of a shame here. Now, granted, even better than the S&P 500, we have much more support here, to kind of help Bitcoin get some sort of kind of swing failure pattern and then recover. So it's definitely not over from this particular perspective. This chart looks a lot better, and the support level definitely does stretch down to, maybe even a little bit lower than where we are now, like kind of 83. So I think that there's still, an argument to be made that this could end up recovering. But, if it doesn't, it's going to get pretty bad below 83 in my books. If we take a look at this chart, there's really not much going on beneath this 83 level. I'm just putting a line right here at 80. Just move that up to 83 proper right there. And below this level, it starts to accelerate a lot, and we're going to end up, kind of starting to sweep some highs. Sweep some lows here, which I think is going to be, concerning for some people here. Now, of course, if we do end up sweeping these lows, then, we're probably headed down to the very low $70,000 range, maybe even the high 60s. That's still going to be the best price zone for Bitcoin to fall into. We've covered this extensively on this YouTube channel, and those of you that are subscribed are going to be very intimately familiar with those details. But a very, very quick recap, because it's worth doing here, is this beautiful 61866 Fibonacci golden pocket sitting right here at about $70,000 to $72,000. So that's going to be still my absolute favorite level for this market to return down to. The lower we get, essentially, the better it's going to be on the way up, right? We kind of know this already. There's still obviously a lot of doom and gloom talk from people in the crypto space, but obviously people in the crypto space are stupid. And they just cannot really maintain perspective of the markets. It's been going like this for over 10 years since Bitcoin was actually officially released. We're really not seeing anything particularly different. And I think with all of that in mind, I'm not interested in kind of jumping on that bandwagon of excessive fear narratives. But again, just taking a look at this chart right here, falling below the support level, obviously not great. If we do manage to recover back, then, we might be in a slightly better place. But this chart has been disadvantaged for a while. We've been covering it on this YouTube channel, basically pointing out how, we're kind of moving up a little bit too slowly for this to be, legitimate price action that sticks. More likely, I said that we were kind of setting ourselves up for a bit of a bull trap. And that is, of course, exactly what ended up happening here. So, that's going to be interesting to kind of continue to watch and see how that plays out. And I do want to let you guys know that there is some beautiful opportunities for free cash when you start trading using these links in the description below. These are great opportunities on great exchanges where all you have to do is deposit and start trading to get more free money in your account. And then any profits you generate are going to be yours to keep, which is really, really cool. So check them out. They are, of course, linked in the description right there. And I want to see there's an interesting promo that just dropped. I want to see if I can pull that up for you guys. And it was on Blowfin, if I'm not mistaken. So here we are. Take a look at this right here. You get up to 10%. Dive in and get 10% on deposit up to $3,000, which is just money that you can trade with, which is very, very cool indeed. And this is just based on trading volume and deposits here, which is, hitting 500K, for example, not that hard. Hitting 1 million, you'd be surprised. You got a 10K trading portfolio, you can hit 1 million trading volume pretty easily. which I think is absolutely great because you just get more free bonuses for using these platforms. So check them out if you're not from a restricted region. Of course, be mindful of your country's local laws and regulations. Phenomenal Bybit card available, of course, as well. And if you're interested in a extremely successful one-to-one exclusive program, then you can reach out on this link here, and a member of the team will get back to you with information. But bringing it back to the video here, if we end up sweeping the low, it's going to get bad. If we end up going back up, it's going to be good. There's really not much else we can say on that. Bitcoin's dominance also floating around the same kind of area. It did pull back by just a little bit, and Ethereum against Bitcoin still sitting at exactly the same place as it was when I made that video earlier today for you guys. If we bring it to the S&P 500, and take a look at this in a little bit more detail, this is really the chart to watch. And look, I mean, I want to spin bullish narratives on this, but this is a bad chart. This is a bad chart. To lose this support level is not a good thing. Like I said, we don't have to be that precise about our support levels, right? We can totally kind of, fall out of them a little bit. It's the S&P 500 at the end of the day, right? So that's kind of, what we're looking at. But at the same time, man, it's not a good look. It's really not a good look to, to basically erase, and we got to put this in numbers, right? I mean, this index ended up taking how long? I mean, to get from this candle here to the high, it took about 11 days, but then to get down, it's only been 3 or 4, right? So honestly, just not good at all, from that perspective, and that does indicate that we're dropping a little bit lower. Now look, it's like I said, we can drop lower and we're still going to be really bullish, right? I mean, this chart is only down by 10%, for God's sakes. I think people are really missing that. This is really not a big drop. We had, almost the exact same percentage drop right here. This was a 9.9 and nobody gave a fuck, okay? Not compared to this right here. So, it's pretty clear that we can drop by 10% and be totally fine, which is the situation that we're in right now. And we can even drop significantly more than that, more like 20%. And of course, we would still be totally fine for the S&P 500. So, it's like I said, I think this is obviously just going to be largely a Trump discussion. And, I've got my thoughts about this. I've kind of expressed them with you on this YouTube channel quite a bit. One of the big prevailing thoughts that I've got, I wrote this down, and it's a tweet that I haven't quite published yet, but I'm gonna read it out to you, and I want you guys to kind of let me know what you think about this, because I really think this is kind of like the most relevant thing that we're seeing right here. Where is it? So my prediction is that the United States turning inward and focusing on itself, meaning tariffs and, lowering taxes and reducing regulation and, all the kind of things that, just basic economics will stimulate a local economy. With the US kind of turning inward and focusing on itself, no longer giving out charitable trade subsidies out to the world. One thing we got to point out, I don't know, this should be common knowledge, but I don't think it is. Look, Europe charges VAT, right? And you're going to have to pay it if you sell to Europe, but it's not the same for Americans. I grew up among people who, are in internet money, right? And in our circles, it's almost like a running joke that you sell to Americans when you're outside of America because it's the best tax haven in the fucking world, with the best market in the world, where everybody speaks one language with one shared culture, and it's just the best marketplace to sell to, right? But if you're foreign, you don't pay taxes. Because, so there's a lot that you can kind of really, really evade, as a foreigner dealing with the United States. And that is now getting equalized, right? But the fact that it's getting equalized, entitled Europeans who don't see any bigger pictures, they think that it's just Trump being mean. It's really not. It is just equalization, right? And these are facts, right? I'm not here to suck, Donald Trump off or anything like that. That's really not what this is. I think that he's absolutely great in a few ways, and I think that he's absolutely dog shit in other ways. I'm surprised why MAGA people can't admit that either. But it is what it is. The rest of the world will struggle initially, right? Because they're no longer getting such easy trade out of the United States. And they're probably going to turn to trading amongst themselves. And then what they're going to find out is that most of those countries are bad trading partners. They're going to suffer, right? I mean, it's shit dealing with shit. It's not going to work very well. The US will also initially suffer. We're seeing that right now because the private sector is not organized to optimize for fully domestic production, okay? And that's a really, really big deal, okay? The private sector in the United States is not organized yet for to be optimized for a fully domestic production, okay? The United States has been drunk off Chinese labor, Mexican labor for years and years and years. And that's going to have to change to fit in with what Trump is doing. And there will be an adjustment period alongside that. Later, of course, the USA will emerge again dominant while the rest of the world is still figuring out their genders or attaching bottle caps to bottles. Okay, that's the tweet right there, and I really do stand behind that. I really do think that that's a big factor of what we're seeing here. And so for me, when we understand that there might be some initial kind of period of pain for the United States, it's then a case of you need some sort of injection to make that not happen. You need some sort of injection to make that feel like it's okay, right? If this was the Biden administration, it would be inflation. It would be just money printing. I don't know if it's going to be the same thing right now. It might be. It actually very well might be with rates coming down and stuff like that, right? So as we enter that kind of transitionary period, that can totally start happening. In the United States to kind of stimulate things a little bit. I don't know. I don't think obviously that would be the healthiest approach. I don't really know how Trump plans to get out of this initial kind of shock where the whole world is changing a little bit. But it's clear to me that Trump is the stock market man, and despite being short and potentially not giving a fuck about things the way he used to, I do think that his pride in terms of the stock market matters a lot to him, and I think that that's really what makes me really feel quite confident when I tell you guys that this thing, the S&P 500, can drop down by a little bit more, 10% more, doesn't matter, and it just wouldn't be in a bad place. And I think one of the primary reasons for that is just going to be the fact that this index was already overextended. A little bit of a sell-off was triggered, and because there was no significant sell-off, I mean, the last 10% sell-off started in July of 2024. It's now March of 2025. It's the end of March of 2025. So I need you guys to be a little bit real with me here, ladies and gents. This is a very long time since the S&P 500 has seen any sort of sizable correction. And I think just purely based off that, ladies and gents, just purely based off that, this is totally fine, totally okay. It's really, I mean, you just can't go off what people are saying, right? I mean, I go on Twitter and it's just disgustingly stupid takes all over the place. Everybody is just stupid. I don't know what else to say. I don't know how else to put it. They're just like, all the takes are wrong. All the analysis is wrong. Everything is hyper sensationalized. Nothing is grounded. Nothing is realistic. That's why you come to this YouTube channel, of course. Thank you very much for subscribing, by the way, if you have. And that's why I think, it's quite easy to be confident about the situation in the market because it's just a normal sell-off so far, ladies and gents. It's just a normal sell-off, and it can get a hell of a lot more intense. It can double in terms of intensity, and it'll be all right. Now, look, if it gets worse than 20% down, then yeah, that's going to be a little bit concerning, but it's still the S&P 500, right? I mean, the longest period of shitness that we saw for the S&P 500 here lasted 300 days, which is, I don't know, what is that? Like, I don't know, 7 months? I have no idea. Maybe more? Maybe, I don't know, 10 months? 10 months, right? It's about 10 months. It's a while, right? But then still, you end up kind of recovering, and all the Nvidia gains that everybody was, beating themselves off to, that shit happened like here. So, the Tesla gains, right? Like that all happened here. So, I think it's a little bit more complex than just, Trump is bad and tariffs are bad. I think that's a really quite oversimplified version of kind of what's going on here in this space. Really, really important. Like I said, I don't really like talking politics, but, you kind of have to at this stage. And, and to me, it just makes sense. You're talking about the most robust, the strongest, the most varied, the largest economy in the world, now getting its fucking shit together. And looking after itself before it looks after anybody else, which whether you like America or not, whether you're American or not, forget about the word America. Any country should be doing that for itself, right? Any country and every country should be doing that for itself, looking after itself first before looking after others. I don't know how the hell this shit's become controversial, but it is what it is. And just just putting it into perspective, okay? If you're buying less shit from overseas, that means you're buying more shit from, domestic sources. People domestically are going to be getting that money, okay? There's going to be more circulating supply of money going around. That's called economic stimulation. It's very, very straightforward, very, very obvious stuff. I really don't quite understand why this is such a challenging, series of logical understandings to have. Clearly, if you send less money abroad and keep it inside and then deregulate and then lower taxes and then, encourage people to work overtime, encourage, no taxes on tips, stuff like that, just all the little stuff like that, clearly that's going to stimulate the economy. There's really never been a time where that didn't happen. And you can, that's an easy Grok or ChatGPT, to kind of help you with that understanding. There's really no excuse for this kind of ignorance at this stage because it's so easy to get this information. You can look at Thatcher, you can look at Reagan. There's a lot of examples, whether you like these people or not. The point is very, very clear that tax burdens go down, but tax revenue goes up, and that's going to be a sign of an economy where citizens are getting what they want and government is getting better funding, right? So it just is what it is, right? Like, this is not supposed to be an emotional discussion by any means. These are just facts, okay? When you do the kind of things that we're about to see, you will get a lower tax burden for citizens, and you will get a higher amount of tax revenue for the government anyway. Which has to be a win-win. It has to be a win-win scenario, right? If people are paying less tax, but the government is getting more tax because people are making more money, then that must be inherently an incredibly good thing for the economy. What the hell do you think is going to happen with the stock market? You know what I mean? Like, it's just so obviously a really, really good environment right now. It could be bumpy for a little bit, and I don't know how this is going to resolve yet. I'm yet to look into that, and I'm very curious to see how it's going to resolve, and I'm going to be watching that with you guys and telling you as I kind of, develop my thoughts on that. But, for these markets, man, we got Bitcoin right here. 72K is still going to be a phenomenal level. 90K is still resistance. What do you want me to say? If I say anything else to you guys, I'm just wasting your time. That's really what it is. So with that note, ladies and gents, I'm going to be heading off. I really hope you have enjoyed the second video of the day. If you have, do me a favor and smash up those likes, subscribe, tick the bell, do all that good stuff. You got phenomenal access to easy cash bonuses to trade with in the description down below. Check them out if you're not from a restricted region. Exclusive program right here, and like, subscribe, do all that good stuff, and I'll see you all in the next one. Cheers.